Hey, Stacy, how are you?
Good. How are you doing?
Good, excellent.
Awesome. Awesome. Ready for this exciting session on finance and business plans,
Yes,
and
I'm ready.
money. Welcome to everyone that's coming into the room.
Hello.
Hi, how are you?
Hello.
Well,
All right, we have greetings from Amelia Jackson. How are you doing today? Immediate past president of the Chicago chapter. Thank you for joining us.
As always, I am looking forward to this conversation, discussion, learn a little bit more about entrepreneurship. So proud of what the Chicago chapter and national organization is doing. So yeah, let's kick it off. I'm ready.
All right, all right. All right, welcome to everyone that's coming into the room. Just going to give them a few more minutes in order to get everybody set and moved into the breakout rooms. Just want to make sure everybody's ready with all their questions. We want this to be a very lively discussion that we have here, so it's beneficial to everyone. So. Hey, welcome. All right, we have Sonia Ben. Excited to learn more about their organization. Awesome. You're in the right place. The right place. All right, welcome.
Hello. Welcome.
How are you? Welcome to the session.
I guess everybody's quiet.
So far, we're just letting everybody get in the room. How are you doing this afternoon?
Doing pretty good. I know I'm getting ready to put my video on a second once I get everybody in that room.
All right. Nice to have you on the set and the discussion today.
Thank you.
All right, so everyone has been assigned to a room. I just want to welcome you all to the Accounting and Finance and Business Plan session. I have Nanette Ray, who is here as our expert. So is there anyone that wants to start off with any questions, or we can start off with questions? So you want to have it out to the room. If there's any questions you want to start off with, let us know. If you raise your hand, we can take you off and then we'll announce you and you can mute, or you can put your question in the chat.
No questions? My goodness, this is tax season. Everybody should have
It's tax season, but I don't think some people want to do their taxes right now. I'm a little scared.
Well, let's talk about that, Daryl.
Talk about it.
A lot of people did not file tax returns, and when COVID hit, could not take advantage of the PPP funds that were available. So if you do not file tax returns, if you have a business and you don't file tax returns, or if you don't have a business and you don't do tax returns, you definitely should. These are unprecedented times. I don't think we will see, hopefully we will not see something like the PPP and EIDL loans in my lifetime or your lifetime or our grandchildren's lifetime, where the government is just giving away money. The reason why they do that is because 90% of the income that the government receives is from small business owners and W-2 wage earners. So if you own a business, the people you employ, or if you work and pay taxes, 90% of their income comes from people like us. So it was vitally important that small businesses survive, because if they didn't, it could take the government down. So, and a lot of people, Daryl, did not benefit from PPP because they did not have tax returns or any way to prove that they were receiving any type of income.
So let me correct you. The only reason why I don't want to do that is because I got remarried, and so so my income has changed big time, and by adding my wife on there is gonna make a difference. That's all. That's the reason why I say that comment. So,
because it's going to be painful for you.
very much. I mean, I gotta come up with a plan of action. But I did get a chance to do the PPP last year, and I also have a business. So it's gonna be an interesting situation. That's all I got to say.
Yeah. Well, just to piggyback on what Daryl said, our tax laws are written for business owners, period. So the majority of the taxes are paid by W-2 wage earners. There are lots of tax savings for business owners. For example, there was a whole debate about Trump paying $750 in taxes. All of that was related to depreciation. So when you're like Jeff Bezos, Donald Trump, and you own lots of assets, the government allows you to depreciate that over a period of time. So if your operating net income was $7 billion, and then you're able to depreciate assets that are worth $7 billion, you pay zero. The tax laws are written for business owners. So I always advise our clients that do not own businesses, do something, bake pies, cookies, something, get a side hustle so you can take advantage of some of those tax benefits for business owners.
Okay.
Awesome. Thank you. Thank you. I see that Sonia Ben has her hand up. Sonia, you can unmute and ask your question.
I think she put it in the chat as well.
Oh, okay. There we go.
Unfortunately, Sonia, those loans, PPP is no longer, and EIDL are no longer available, but they were only available for businesses that have been in operation since 2019. So it was not designed for startups. So I think it was February of 2019 you had to be in business. But again, there are some other tax benefits that are out there. ERC tax credits are one, where the government, if you retained your employees during 2020 and 2021, they will give you up to $5,000 for 2020 and $7,000 per employee per quarter of the first 3 quarters of 2021. So a lot of our clients are taking advantage of that. We just completed a client yesterday. He's going to get like $240,000 back as a credit. So if you are a business owner and you employed people during 2020 and 2021, you definitely need to talk to someone about seeing if you can take advantage of the ERC credit.
Awesome. Awesome. All right. So as we're talking about a little bit about the taxes and the tax rules, can you talk about, some of the changes for, as it relates to like meals?
Oh, that's a good question, Stacy. As part of some of the new laws that went into effect prior to 2020, if you the IRS recognized that some businesses, you have to take clients out to lunch. So those meals were tax deductible, but only at 50%. So if you spent for the total in 2019, if you spent $1,000 on meals, you could only write off $500. But for 2020 and 2021, the law has changed and you can write off 100% of any meals as long as it's at a restaurant. So, and the reason why they did that was to help revitalize the restaurant industry and encourage business owners to actually, participate or go out and eat at restaurants. So it has to be a restaurant. So if you stop at CVS Pharmacy or Walgreens and you happen to pick up a snack that is not a restaurant, that would only be at 50%. So if you have bookkeepers or accountants or CPAs that's doing your books, please make sure you go back and talk to them about whether or not they classified your transactions. What we did for our clients is we created underneath meals, we created restaurants 100% and meals 50%. So as we were booking their transactions, so we didn't have to go back and do that when it was time to do their tax returns.
Awesome. Awesome. Great advice on that. Is there anyone that has a question at this time? Okay, so what about if you're working out of your home for your business? Can you write off some of those housing expenses?
Absolutely. A great question, Stacy. Again, remember I said that the IRS tax laws are written for business owners. So if you have a home office and you work exclusively out of your home, meaning you do not have a storefront, because even though you may have an office front, you could still work from home. It's if you exclusively work from home, a lot of consulting businesses do that and work from home. You have the advantage of, it has to be a designated office space. The only exception is childcare. Childcare, you can use your living room during the day and then revert it back. It can't be a bedroom that you convert to an office during the day. It has to be a dedicated office space. And let's say your total square footage of your home is 2,000 square feet and the office space is 500. Then you can write off a fourth of your mortgage, your tax return, your property taxes, your rent, insurance, utilities, internet expense for the entire year. So, people are from different around the countries, but the average mortgage payment here in Texas is probably around $2,500. You take a fourth of that for 12 months, that's quite a bit of write-off. So the IRS recognizes that you're utilizing your home as part of your business office space, and you can write that off. It also includes storage, like if you're using a third bay of your garage for storage of items, you can include that in the square footage. If you're using a closet for storage, you can include that in the square footage as well. So it looks like
Awesome.
we've got two people with hands up, Sarah and Sonia.
Right, Sarah. So I think Sonia forgot to put her lower her hand, but Sarah, you want to go on unmute yourself?
Yes, thank you, Stacey. So back to your statement about the meal write-offs, is that still in effect for this year, 2022? 100% at restaurants, 50%
I
not.
think it is. I know it is for 2021. I think that is for 2022 as well.
Okay. All right. We have a couple of questions in the chat. Is Starbucks considered a restaurant under the tax law?
I would say yes. Starbucks is considered a restaurant because they do serve food as well, and they do have a dining area. So we have been classifying Starbucks as a restaurant.
Okay. Awesome. Awesome. All right. What are the key differences between deductions for a regular vehicle versus a luxury vehicle? And this came from Justin Word.
For a regular vehicle versus a luxury vehicle. I have some additional questions for him. Who was the question from?
Justin Word.
Justin, is the vehicle purchased in the business name, or do you personally own the vehicle and use it for business?
Hello, everyone. It's Justine.
Oh,
Oh,
sorry.
No,
Hi,
that's okay.
Justine. Sorry about
I'm
that.
so used to it. It's okay. So it's one of my clients. He actually made the purchase in the business name.
Okay, so does he use the vehicle exclusively for business, or does he use a portion of it for personal?
I'm pretty sure he uses it for personal reasons as well. He's a young NFL player, and I think it's his only vehicle as well.
Okay, so if he purchased it in the business name, let's say, did he lease it or did he purchase it? The reason why is because the IRS rules are different.
Okay. He did lease it.
Okay, so if you lease a vehicle in a business name, you can write off those lease payments that you're making monthly. And you can also write off any down payment that you have. Now, the thing is, if you're using it for personal, you need to track your mileage. So, you know, in terms, and there's some detailed requirements the IRS has around tracking mileage, because any gas, maintenance, anything like that, let's say if you use it 50% for business and 50% for personal, the IRS expects that you pay it that way. 50% will come out of the business and 50% will come out of it personally. The disadvantage to leasing, had he purchased the vehicle, remember we talked about depreciation. You don't own the vehicle when you're leasing, you're just paying it during the years in which you are using it, so you don't own it. But let's say he purchased the vehicle. Let's say it was a Range Rover, he purchased it for $150,000. In the year in which he purchased it, the IRS has a rule, you can write off the full value of the vehicle in the first year. So let's say his net income was $500,000. He could depreciate 150,000 of that and lower his net income to 350,000. So there's some advantages to purchasing a vehicle if you're going to use it in the business versus leasing. Typically, we advise clients to lease if it's a very high-end luxury vehicle that is very, very expensive. That may be a benefit for leasing, but the benefits for purchasing definitely outweigh that.
Thank you.
All right, thank you. Looks like we have 1 minute remaining. Let's see if we can get this last question in from Joy James. I'm starting my business, but have not sold anything yet. Have expenses. How do I write this off? I also work from home.
Ah, love this question. Okay, real quick. Definitely do a tax return, because if you have a W-2 income that you're paying into the IRS, let's say your total losses for the business was $5,000. If you've already paid in and you show that loss of $5,000, you could definitely get a refund and take advantage of that home office deduction as well for your business. It could definitely be a substantial refund for you if you do that. So please, please file a tax return. Most people think they have to start making money to file a tax return, but that is not true. You have started your business, you've incurred some expenses. You need to take advantage of writing off those expenses.
All right. Thank you, everyone. I think they're going to switch out the moderators now. So you will be getting another set of moderators. I appreciate you all.
All right, nice meeting y'all.
Nice meeting everyone.
Thank you.
Thank you.